have Sean Sherwood from the Financial Aid Office at Binghamton University joining us today. And he's going to talk a little bit about understanding scholarships and student loans. So if you have any questions that come up through the presentation, just throw them in the chat or we can get to them after. Thank you.
Do you want me to get started, Sophia?
Yeah, you could go get started.
Okay. Hi, everyone. Thanks for joining today. My name is Sean Sherwood. I am the Assistant Director for Financial Aid here at Binghamton University. I'm actually local. I went to Johnson City High School, go Wildcats. And then I went away to college to SUNY Oneonta. I studied music industry while I was there because I wanted to be a rock star / producer. But while I was there, I got to work with great college students and decided that I wanted to work at a college. And so I worked in residential life for a number of years and then moved over to financial aid where I've been since. I have had a few years of experience of the financial aid world, and I hope to impart some wisdom on you all. And again, if you do have any questions, please make sure you throw those in the chat, or maybe we'll save some time at the end here. So I'm going to talk to you about just some basic high-level understanding of scholarships and student loans. As you are looking at applying to colleges, those kinds of things, things like scholarship applications become super important, as well as other types of financial aid, such as being able to maybe be employed while you're a student, receiving some sort of need-based grants, or using something like a student loan through the federal or private areas. So the first thing I'm going to start talking about is the less fun of the two topics, which are going to be loans, and then we'll jump into scholarships. So here's basically my basic talking points for today. We're going to talk about types of loans, eligibility, sort of how you can receive a student loan, some options for like repaying those loans later in the future, and then we'll jump into overview of some scholarships. And then if you're a New York State resident, there's some great programs that are available to you. So like I said, we're going to start with loans first, as it's the less fun topic. The federal government actually has a really great loan program. It's called the Federal Direct Program. College students can apply for these federal loans by completing what's called the FAFSA, which is the free application for federal student aid, completely free to complete. Any college student or incoming college student can complete this application. And as part of that application, a student will be eligible for a federal loan. It could be one of two of these types of loans here, the subsidized and the unsubsidized. Basically, the difference is that a subsidized loan does not accrue interest. As you progress through your college career, it doesn't accrue any interest. So when you start repayment, you start repaying on the amount of the loan you took, not the loan plus interest that's accrued over time. The unsubsidized loan does accrue interest. But as a college student, you are not liable to start repaying it until you're no longer a college student. So assuming that you graduated and gotten a job, and then you would start repaying on both of these loans. So these federal loans are awarded to the student. They're not, there's no parent involvement in repayment of these loans or management of these loans. These are awarded directly to the student and paid back by the student. There's no additional application other than the FAFSA. And there's no credit check to qualify for these loans. Every student, as long as you meet the basic criteria of completing a FAFSA, you are eligible to receive these loans. Like I said, you delay repayment while you're in school. And so as you become a freshman, sophomore, junior, senior, you're not liable to start repaying these. You delay those payments until after college graduation. Like I said, you must complete the FAFSA to be eligible for these types of loans. And the loans are sent directly to the college. This is sometimes a confusing point. The loans don't go to you and then you pay the college with them. The loans come directly to the college, and the college use those funds to pay your tuition fees, housing, meal plan, and those educational costs. Now, the federal government also caps these loans. So for example, as you can see in this grid, if you are a freshman, first year student, and you're a dependent, so you're dependent under your parents, you can take up to $5,500 for the year. If you're independent, they do offer you a little bit more, up to $9,500. And then as you can see, excuse me, as you move up in grade level, you are eligible for a little bit more in those federal loans. Another type of federal loan is called the Parent Plus loan. Now, this is a loan that can be taken out by a parent or step-parent of a student to help with that student's educational costs. So this is a federal loan option that is used to help families pay for those college costs that aren't covered by other types of financial aid, whether they be scholarship grants, other types of loans, those kinds of things. To be able to use the Parent Plus loan, the student does have to have a FAFSA on file, and the Parent Plus loan application, which is a separate application that a parent can complete. Parent Plus loans are available to parents with the exemption of if you have an adverse credit history. So it does do a credit check as part of the application process. But if you pass that credit check, the student can receive up to enough to cover their college costs minus that other financial aid. Excuse me. So something to point out about the Parent Plus loan is that this loan will always be under the parent borrower's name. You can't transfer it to the student later down the line. Now families do figure it out in terms of who is going to be repaying this loan in the future, but it will always be under the parent's name in terms of their liability. And there is a fixed interest rate for this loan. It's 5.3% for this year. The student loans, the loans that we just talked about, the subsidized and unsubsidized, they're like 4.6 right now. The third type of loan are your private loans. These are your Sallie Mae, Discover, College Ave, SoFi. There's a lot of different companies out there who offer education loans that are through private companies. So these loans are not offered by the Department of Education. They are private lenders, which are banks. You know, many of us are familiar with Discover, the credit card company. They do student education loans, but also local credit unions or online companies can also do student education loans. So the idea behind these is you have the option to choose the lender that you want to go with, fill out an application through their website. It does go through a credit check to find out if you're approved or denied. A lot of times, because obviously college students may not have a very rich credit history, that it will ask for a credit-worthy cosigner, which could be a parent, family member, or anyone else who'd be willing to cosign with you. The interest rates can either be fixed or variable depending on what you choose. And sometimes they can be quite high. So it's very important to look at those different interest rates or what those companies would be willing to offer you, especially in comparison to those federal loan options that would be available. Also, private student loans usually don't come with the same general protections as the federal student loans do, which I hadn't mentioned yet. But for example, for the student federal loans and the Parent Plus loan, if you are having financial hardship later down the line, there are ways to forbear or defer repayment for a given amount of time to essentially get back on your feet and start repayments again. Private lenders may not have those same options. Some do, some don't. So it's important to look at those different terms and conditions if you're looking at private loans. And of course, repayment terms also not as flexible as federal loans, which we're going to talk about repayment in a little bit. But the federal government offers like 8 different repayment plans right now. Usually these private lenders, you get one option, and that's to pay monthly a set amount. For those direct loan, those federal direct loans for the Parent Plus loan, the subsidized and unsubsidized, when you first take those out, the federal government does require you to complete what's called entrance counseling and sign what's called a master promissory note or a loan agreement. Now that sounds scary, but it's not really that bad. The entrance counseling is sort of I like to call it a webinar with a little quiz in between. It gives you information about what does it mean to take a loan, what does interest mean. It gives you some educational points to help you make sure you know what you're getting yourself into when you're taking a loan out. The MPN or loan agreement is the legal document, the promise to repay those loans in the future, basically the terms and conditions that you're signing off on for those federal loans. Now, on the back end, once you are in your senior year and about to graduate, you will be asked to complete exit counseling, which is very similar to the entrance counseling, which you would have completed potentially 4 years prior. But it allows you to, again, get that same information about your federal loans. How much loans have you taken in your college career? What does repayment look like? What could your monthly payments look like? So it gives you a breakdown of that information just so you're aware. Repayment. So, many of us have heard that student loans are very difficult to repay. And while that's very true, the federal government does give you some flexibilities in terms of repayment. The first of which is when you graduate college, you get a 6-month grace period that starts. It's technically when you drop below half-time. Hopefully for most of us, that will be when we graduate from college. You get 6 months. So if you're graduating in May, you just walked across that stage and got your diploma, now the clock starts ticking. You get 6 months before you have to start repayment. About midway through your grace period, you're going to be contacted by your loan servicer. This is the organization that you're actually going to set up that repayment with and do the repayment options with. There are various types of programs and options for repayment. You can do your standard every month for 10 years. You can do it based on how much income you're receiving each month. There's a lot of different options that are available. And as I mentioned before, there are the options for loan deferment forbearance. And so if you are wanting to temporarily postpone or reduce your federal student loan payments, there is an option to do that or to halt it due to financial hardship, or if you go back to school, or a number of different reasons. Now, something to also keep in mind, and this is true for federal loans, private loans, is you want to avoid going into default. Default is when you fail to make your repayment on your loans. And that can negatively affect your credit score, which can affect things like getting a car or house loan somewhere down the line. So you always want to make sure that you're in good standing with your loans and making those payments. If you're not able to, it's important to reach out and see what options you have so that you avoid going into this default. Now, for federal loans, there is a great program that the federal government has put into place called the Public Service Loan Forgiveness Program. Essentially what this is if you've taken out federal loans to help fund your education and you end up going to work for a government or not-for-profit organization, you can receive loan forgiveness through this PSLF program. Essentially how it works is you have to work in the public service realm or not-for-profit realm for 10 years and make 120 qualifying monthly payments, which is 10 years every month. Anything beyond that 120th payment would be forgiven by the federal government. So that's loans. Let's go into something a little more fun, which are scholarships. So scholarships are, of course, free money that is usually given to a student based on either academic merit, musical ability, athletic ability, community service, some sort of, or sometimes a combination of multiple plus maybe financial need. A lot of scholarships are offered through various colleges that you're going to apply to or through outside organizations. It's very important to do some research in terms of the different scholarship opportunities that are out there and make sure that you're visiting those college websites to see what scholarships might be available through them and through organizations that they're aware of. A scholarship from a college or a private or public college is generally going to be based on the student's academic merit, which is going to include their SAT or ACT scores, their high school GPA, letters of recommendation, extracurricular activities, all those things to determine if a student would be eligible for a scholarship. Generally, if you're receiving a scholarship from an institution or a school, a lot of times they'll be renewable for the 4 years that you would be attending undergraduate study, but that would be in the terms and conditions of those scholarships. And then scholarships usually do require a GPA. So as you progress term to term, semester to semester, they're going to review you to make sure that your GPA is meeting that criteria to continue to renew that scholarship from year to year, semester to semester. Sources of scholarships, like I said, can come from a variety of different places. Of course, the main one is the college that you are looking to be admitted to. But there are thousands, tens of thousands, maybe hundreds of thousands of scholarships from private organizations, public organizations, and different resources that are outside of the individual college that you're looking at. There are a lot of great search engines that are out there to look for outside scholarships. A really great place to start is those scholarship searches such as finaid.org, FastWeb is a popular one. And then of course your high school guidance offices are really great resources as well. Studentaid.gov, which is the government website for federal aid, also gives some great resources for scholarship searches. But also some places you might not think of are like local libraries, local businesses or civic organizations. If you as a student are employed, your parent, employer, or union, or if your parent is a veteran, sometimes there are veteran or child of veteran education benefits. So these are very important to look at. There's so many resources that are out there, and it's very important to take a look at those resources, because even $100, $200, $500, that can make a big difference. Now, that being said, there are also a lot of scams that are out there for scholarship searches. So I do want to make you all wary. If you are looking at scholarships, make sure that it's legitimate. Google that particular business or organization, make sure they are legitimate. You should never have to put in things like your social security number or credit card information or bank account information when you're applying for a scholarship. Those things should never be asked for in those types of applications. So if it doesn't feel right, certainly reach out to the school that you're applying to, their financial aid office, high school guidance office. They should be able to help you out there too. Now, if you're a New York State resident, there are a number of different New York State opportunities to help pay for your education, especially if you're going to go to a SUNY or CUNY school. New York State provides a grant called the TAP grant, which is available to New York State resident students going to a New York school. But there are also other programs such as the New York State Excelsior Scholarship that can help pay your entire tuition charge at a SUNY school or CUNY. So the Excelsior Scholarship came out a few years ago, and it was sort of slated as free college for New York State students. Unfortunately, it's not necessarily free college, but it will pay your tuition charge. For an in-state student, that's about $7,000 a year that you could receive by applying for the Excelsior Scholarship. To be eligible, you do have to be a New York State resident. You have to be a US citizen or eligible non-citizen. You have to have completed your high school diploma or equivalent. You do have to be matriculated in a full-time in an approved a program of study. Matriculated means that you actually get admitted to the school and you're looking to get a degree, whether that be associates or bachelor's. It has to be a SUNY or CUNY school. And the family income has to be less than $125,000 a year. Once you are deemed eligible for the Excelsior Scholarship, you must complete 30 credits per year in order to keep retaining it from term to, or year to year. So for when you're ready to start applying for financial aid, of course, you're going to want to complete your FAFSA. Through this site, hesc.ny.gov, you can also apply for the New York State Aid Payment Application, or typically it's called the TAP application, as well as Excelsior if you're interested in going down that route. HESC will process all this information through its general requirements, and they'll verify that income information. Now, as part of the Excelsior scholarship, you do have to sign a service agreement saying that you will, by receiving the Excelsior scholarship, you promise that you will live and work in New York State for the amount of years that you received Excelsior. So if you receive Excelsior for 4 years, the service agreement would ask that you work in New York for 4 years as well. So my final advice, at least in terms of loans, is, it is a viable option. Many students do use federal and Parent Plus loans and private loans to help fund their education. Student loans, especially in repayment, will help you build credit history and maybe help you create monthly budgeting by, if you take the time and, decide what you need to borrow and, make those payments on time. Once you start repayment, that will help you build a good credit history. A really good thing to also make sure you're doing is tracking your borrowing. For federal loans, it's very easy to track how much you have borrowed. I know many students don't do that, and I can't understand why, but they do. It's very easy to do. You can track how much you've borrowed, so you kind of can keep a running list. So if you set yourself a threshold or whatever the case may be, you won't go over that threshold. Another tip, at least in terms of loans, is you do have the option to pay while you're in school. You're not going to be mandated to. You can always go in and make one-time payments. Some students will, get a summer job and throw $100 towards, their interest and principal of these loans, and that is certainly an option you can do. Again, it helps you build a little bit of interest, and it helps you avoid, what's called capitalization, where at one point when you start repayment, any interest that's accrued now becomes the principal. So it's a good practice to try and do that if you are able to. And the biggest thing is only borrow what you need. Schools will budget you well beyond what you're being billed by that school for things like books and personal expenses. And many students borrow more than they need. And they take this check and think that it's just free money they can use for whatever they like. But in the end, your future self will thank you if you only borrow what you need to, get you through your college experience, and you'll be ending up paying less over the rest of your life. In terms of scholarships, start scholarship searches early. There's nothing that stops a student who's in their junior year of high school to be able to start looking at scholarship opportunities that are out there. And making sure you're paying attention to those deadlines, especially with the individual colleges you're looking at. Searching both online and within your community, like I said, local libraries, employers, local businesses. There is money out there, and you just need to kind of take the effort to look for it. As I said, be aware of scams. Coordinate with your high school counselor and apply. Submit every application you can, because like I said, even $100, $200, that can buy a few books, that can help pay your tuition or fees. It can make a big difference. And now that I've talked at you, I lead you to any questions you have.
Any questions for Sean? All righty. Well, it doesn't seem like it, but Sean, thank you so much. I mean, that was great. I know we have some students here today, and then we're also going to be making this recording available to our parents, which will, I'm sure, be helpful. Appreciate your insight, and especially those tips and tricks. Those are things that we're definitely talking to our seniors right now, especially our students that are actively looking for scholarships, trying to find that financial aid and understand the differences between the different types of loans. So that was very insightful and very helpful. Thank Thank you so much.
My pleasure. And if I can close by saying that every year we get organizations contacting our office saying, send us students because no one has applied for this money. And so, you know, even if you think as a student that you might not be eligible, maybe you don't exactly fit that criteria, sometimes it's best just to apply anyway because you could be their only applicant. And so I strongly encourage you to apply for everything you can get your hands on.
Great. Thank you so much, Sean. Hope everyone has a good rest of your evening, and we will see you next time.